And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show, presented by RIA Advisors.
In a world where everybody gets offended by breathing, we're here to, well, y'all could take a joke. That's what I love about all of you. And the live chat is crazy this morning. It's crazy, crazy. Welcome, everybody, to Financial Fitness Friday. I'm Rich Russell here with Danny Ratliff, CFP Squared. We are trying to figure out if we're going to have an 8th day of gains. It seems like we're in this positive momentum again, Danny. Right? I really like the market action where we open weaker and close stronger. So we'll see how long this lasts. So we got some earnings today. Nothing really to talk about. Enbridge, Honda, AMC Networks, Hawaiian Electric. Boo-doo-doo. Where am I lay? University of Michigan consumer sentiment. Somebody flushed the toilet. May preliminary, 77 expected, 77.2. I'm surprised it's that high. Who are all you happy people? Can I take what you're taking? Danny's got that get off my lawn look this morning.
They pulled him on the 6th day.
Yeah. Oh, man. You know what? It's just go with the flow for me with markets. We're seeing some action by banks overseas. Hey, what are we going to do next? Bank of England kept its key interest rate unchanged. UK Bank also left its key rate at 5.25. But of course, there is with the latest employment reports and so forth that maybe we will get cuts across the globe. But these banks, these central banks, don't seem to be in sync like they used to be.
No, they don't. It doesn't seem like they're coordinating much these days. But we're getting a lot of different economic data. I mean, if you look at overseas, they've been slowing down for a little bit longer. We've been a little bit more resilient here. That jobs number, the continuing jobless claims at 231,000 versus 213.
Yeah.
I don't know how big that is, but it seems like that has automatically overnight changed the stance. We saw Treasury yields in the intermediate or longer end of the curve fall quite a bit, over 20 basis points. The shorter end has stayed pretty flat.
Yeah.
But
pretty steady.
All of a sudden, the narrative is that it's dovish. This is where, once again, we see bad news is good news, meaning more people are out of work.
Yes.
So, I don't know. It's tough to see
Well, we're so data dependent. The market whipsaws with every new data point. And if you are an investor and looking for a discernible trend in the short term anyway, it's very difficult. I mean, just based on whatever new data is coming out, and then your assumption about, it's Fed myopic, right? That's all everybody cares about. So if there's any number that comes in softer but not too soft, then things are going to change. Or like you said, the animal spirits are shifting quickly. The unfortunate part is if you're going to try to do that with your portfolio, you're going to lose your mind before the end of the year.
Here's what I think people should do.
Shut everything down for the next 6 months.
No,
but listen to us.
But I think people discount their feelings and emotions.
What do you mean?
I think if you could write a journal every day about what you think about the market, what you feel, what's going on,
and then we'll read all your excerpts on it.
No, but where the market is. Here's what actually happened. Here's what's going on. Because so many times we let our emotions get in the way. I mean, just 8 days ago, people wanted to run for the hills. We need to get more conservative. Now we've seen some positive action in the markets. Like you mentioned, 8 positive days. And, we've tested that 50-day moving average once again. And that's technically bullish right now. I'm not sure how much upside we can see from here, at least momentarily. But, it's kind of interesting. And I think that we're our own worst enemies many times just because of the emotional aspect of this. And so
we always feel like we have to do something on these
right.
data points, like as opposed to maybe just not. I got an interesting comment from someone the other day. He says, gosh, you're just not placing as many trades as you used to. He said, well, the trend is the trend, right? We follow rules, and if the rules don't ignite, then we don't do anything. It is what it is. I mean, things look great, and we're happy with how the returns look. And we've been trimming profits and moving away from losers and doing all the things that we are supposed to do. But we're not in this stage where we're getting clear signals about a cleaner direction to move. Yeah, we have a little bit weighting in stocks. We're a little overweight, but not even, I don't think, at our target, maybe a little bit closer to the target, but we're, it's a challenge. As each number comes out, the worst thing you can do is react to it. Short-term traders, right? All the algos, they're gonna flip out and do their thing. We can't be algos. You can't be. I can't be an algo because then I'll go crazy. That's a robot, really.
That's what's going to keep you from that.
So I think the hardest part. It's funny. It's if markets are doing terribly or markets are doing dramatically well, people have to sort of stay centered. Find your center. Breathe. And I agree with you. You should take a little note every day about what you're feeling. That's a really good way for you to feel like, I did that through the financial crisis. I found the notebook the other day. I should read some of my excerpts. Look what these idiots did today. Why are they letting this bank fail and this one succeed? It's just a commentary of what we were going through at the time. But sometimes to keep notes of what you're going to do or what you're thinking about doing to a portfolio or any changes to your finances based on economic data points and emotions, maybe it'll recalibrate you a little bit.
What I think most people find is that usually when they're ready to run for the hills, that's probably when things are likely going to turn. We talk about the animal spirits and just, the behaviors that people have in general. And it's difficult because, we talk about this frequently. I don't discount. This is your livelihood. This is what you saved and worked so hard for. But on the other hand, we have to understand how markets work. We have to understand, how to manage money along the way and take profits. And I think that's a struggle for many people is that we get into something, it's doing well, we continue to write it up, and then the moment it goes bad, we're like, whoa, shoot, I can't sell. I don't want to pay the taxes on this. And then inevitably you end up losing more than what you would have paid in taxes. And then some, and then we have to wait it back out.
Yep.
And granted, listen, if you're holding on to positions long term in solid, good companies, look, you've benefited. You've done very well because of it. But you're creating other issues further down the road as far as how do you manage and protect assets. But the emotional aspect, I can't emphasize that enough on the impact of bad behaviors with money.
Well, we know the difference between investment returns and investor returns, right? Dramatic.
Yeah, big difference.
Big difference, right? And because it's not easy. And we don't have rules, or if we do have rules, we sort of bend them if they break. We don't say, well, maybe this isn't a trade anymore. Maybe it's an investment, and you don't want to do that. Live chat, Amaranta, why does it take a month to convert an IRA to Roth? You should see how long it takes to take 529 money and move it to a Roth. As I did for my daughter. You know how many weeks it took to get that done? 6 weeks. Filed the form, never heard from them. And I'm like, what the heck? Finally, it's done.
This is something you do on a daily basis. So don't feel so bad.
I'm not feeling bad.
No, I'm talking to them out there.
Oh, yeah.
Anybody else?
Oh, yeah. We'll be right back.
Get daily investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
So you're ready to retire. But are you ready to transition to Medicare? Knowing how health insurance works after you leave your job is vital. Our next Lunch and Learn will tackle transitioning to Medicare. Wednesday, May 15th, with Danny Ratliff and Richard Rosso. How do you sign up for Medicare? And how will it work with the insurance you already have? Food for thought and food for your belly. Register now for our Transitioning to Medicare Lunch and Learn with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning. At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
The Real Investment Show.
Small businesses are discovering that attracting and retaining top talent come down to more than just salary. In today's highly competitive job market, compensation is more than just wages. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Healthcare and retirement plans can make the difference in hiring and retaining the best employees. We can show you how to build an affordable, effective employment package that delivers true value for your workers and your business. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. Bulls win in bull markets. Bears win in bear markets. Eagles soar above and take advantage of opportunity. Let us help you soar as you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Live chat is a Brent fan club. Brent is making America better? Wow. Is he filling in some potholes, building infrastructure? What's he doing over there? He does make America better with his soft, syrupy tones. And he just got a darn raise. Now, he always deserves a raise.
Got to start a GoFundMe account.
Yeah, GoFundMe.
Yeah.
GoFundMe so I can make America better.
Did you remember the radio guy that he always doing gags and stuff, and he would just say, "Send your checks."
Well, it was like a Soupy
Wouldn't
Sales
say what
thing?
for.
Soupy Sales, send us $1.
Send us $1. Send us checks.
How many dollars did he get, Soupy Sales?
I
Soupy
don't
Sales is a guy,
remember.
I don't remember, I barely remember reruns, but I think he said on the TV, kids, go ask your parents, we'll get $1 and send me $1. And I think it turned into like this big thing. The kids really sent the money.
The guy was a brilliant comedian.
He was. He turned out to be a little nasty guy in the end, but he was funny as heck with the puppets. And he was, the black and white was so grainy by the time I even got to it. And I don't even know where those shows are. They even show them on YouTube anymore?
Mm-hmm.
But if you ever get a chance to watch the Soupy Sales show, because even though it was for kids, it sort of wasn't. Like he would do some things and I go, what was that? What did he say? Did he say something about a hung jury and Stormy Daniels? What did he say? So, he just used to be very clever with what he put together. Then he became a radio guy in New York when I was in New York, growing up in New York, and he was pretty funny. Then he took himself too seriously and he blew it all out of the water. So I will tell you what I think is positive, Danny. So after the whole the George Floyd thing and DEI and all that, as there's an article in the Wall Street Journal I thought was actually pretty refreshing, that CEOs, when it comes to this contentious election we're going to see, are staying out of it. They're being neutral. Like, just do your job. No partisan stuff. We're not promoting one thing or another. I mean, I think that's the way it should be. You're there to do a job. Nobody cares about your politics, right?
Well, we're still pretty early in the cycle. I'm not.
No, but I'm saying is, but CEOs are, because they're seeing the backlash. Why would I want that? Why do I want all this emotional stuff that gets in the way of business. You support your people, and we don't take these debates. A lot of Gen Zs want employers to speak their political mind, and they're approaching and they're saying, listen, we're not doing that. This is a stark reversal from what we saw in 2020, right? They have to navigate all these things, navigate immigration, abortion, gay rights, and all that, right? You just hire the best people for the job. You have a diverse workforce. Matter of fact, I think we are probably one of the most diverse RIAs when it comes to the people we have working here.
Yep, I'd agree.
Right? Colors, nationalities. But what is the one thing that they all have in common?
More
they're
than
great
one. People. They're smart people.
They can do their jobs.
That's right.
They are great at what they do.
Yeah.
And they treat the customer or the client as number one. And I don't care if you're pink with red polka dots. Although we would probably put you on webinars and stuff. It would be pretty interesting to see you. So one of the CEOs of this artificial intelligence startup said, the workplace is not the forum for working out all the political issues of the country or the world. And I think that we have a mission. Everyone
Amen.
is at will, signed up to make the mission happen.
Stick to your mission. I mean, and that's the
Right.
problem. I think that these guys, now it's making it harder for me to figure out who and where I'm not going to shop. But
yeah, it's like I do that too now. And I don't like doing that, frankly. But now companies have taken a stand for which they tell you, we don't want your business.
But has it worked?
No,
I
don't think it
maybe
has.
it has worked, as I'm saying.
Well, I don't know. Starbucks, they have brought Howard Schultz back because he said, we got to go back to selling coffee again.
Well,
so
yeah,
I don't know if
but
it's
what I'm
working.
saying is that it must be working. So if enough people say, I've had enough, I don't want to hear about this.
Yeah.
And they've had to take a notice for a reason. So like, I always feel like, my little bit of money that I spend at these places,
They don't care
it's
about
a drop
me.
in the bucket,
Yeah.
right? But if enough of us do it, it sends a message. So clearly they're getting a message if these guys, look, it's all about the bottom line for them. So they felt like when they were deciding, they needed to talk and they needed to espouse every thought that they had on anything outside of business because they thought it looked good.
Yeah.
Look, this was a PR deal. That's all it was. And now it's the opposite because now they're getting backlash. They're saying, oh, shoot, people decided not to spend money here. I think I'm going to have to keep my mouth shut.
You cater to the squeakiest wheel. Think about how many people really are on X or social media, and yet they get the attention. And that is not, for the most part, those are not your people. They're just there to complain. That might not be your biggest customer that comes in and drinks coffee every day, just wants to get his or her day going, wants to drink your coffee, doesn't want any politics tied to it, and just wants to leave, right? Give me a great experience, give me a great cup of coffee, maybe a donut, maybe a cruller, maybe an egg sandwich. I'm hungry. And leave.
You know, the funny thing is, I don't mind. I actually enjoy talking to people with different viewpoints.
I do too. I absolutely do.
But they make it so darn difficult this day and age.
But I don't think
with everything that's happening here that you.
But let me ask you a question.
Nobody wants to have that.
Is it really that way, or is it just who gets the attention? Because if you have a conversation, I have friends who are all across the political spectrum, and I could have discussions with them, and we're friends, and they don't like some of the things that they see either, but they didn't like some of the things they saw before. But we can have a discussion about it. You can't do that on social media. Right? It's just social media, I will still say, is the worst thing that has happened to society. I understand there's a lot of good things. I've benefited from it in a lot of ways, but I will tell you, I would give it all up. I don't think it's healthy. Right? So now, you're right. Companies are, maybe like you said, they're going back to what they're supposed to do. And I think that's why also, and maybe, and this is anecdotal at best, Danny, but I think this is why also the market is doing well outside of all the turmoil we're seeing. Because when I listen to conference calls or I read transcripts, I don't see anything that's political in them. It's about what it's supposed to be about. Building our business, managing our expenses, doing stuff for our employees, whatever it is, right?
Yeah.
It's more, it feels like the market world, I hate to say this, and I tell people it's like doing Tron. Like I look out the window of my office and I see all the cars and all that. That world is so different than me looking at the computer and the world that I work in most of the time. And that's how I explain it to clients. It's like, this is its own world, and this market does things that the economy or perhaps your feeling has nothing to do with it. But in some ways, I say I would rather be in this market world that is crazy in its own way because I understand it versus all the turmoil I see outside. And when I listen to CEOs or CFOs and read transcripts, it's back to what it should be.
Yep.
And that feels
back to the
comforting.
numbers.
That feels
It's back
comforting to me. Yeah, that feels comforting to me. Well, speaking of comforting, Social Security, will it last past 2035? You know, the one thing I expect to do in 2035 is what I expect you, Danny, to do in 2035 is go to Lance's desk and ask him because he'll still be working.
Oh, he will be.
Yeah. Well, Danny, what'd you say? My MACD is what?
You know, we'll have Lance cloned with AI by that time.
Oh, we will have a Lance AI. You know what? What a great idea, Lance AI.
Yeah. Oh man.
My wife said that she doesn't like me as AI because I don't have my normal voice. I have this computer voice. So, obviously, Social Security, nobody wants to touch Medicare, Social Security, bolster it. The most important thing we have to understand is that haircut cuts for Social Security and planning projections. Well, you got to look at where a person is. So Donald said something about in your planning. Probably should at least put haircuts for Social Security and planning projections. You know, for some Gen Zs, Danny, what I'll do when I run some accumulation plans and what they're doing is they'll tell me, listen, I want to run this without Social Security. Or maybe I want to, you know, I want to see what things look like without it.
Yeah.
And I'm like, if it gets you, I do think it'll be there in some form for you, but if it gets you to actually save more, if we do that, I'll manipulate the data to do that. Gramarasso AI, JP says. Gramarasso AI. Oh, no, we don't want that. We don't want that. So I think that we have to look at every year, things are going to change. The trust fund, now it's going to last. Looks like things are in better shape. But we have to focus on tweaking and doing the things and having the adults in the room come together and understand that this program can't go away, right? And we have to find ways to fix it. And right now, it's not that difficult to do it. But what I notice, if someone says you have to, I think maybe Nikki Haley said it, but she didn't say 70, but you know, maybe we have to look at, you know, increasing the retirement age for this group. The other party gets crazy on it, right? Or both parties, they can't bring it up. They can't talk about it, which means they can't fix it. They can't fix it. Yeah.
Yeah, but I think the good news, so the first bright spot here is that every single year we get this, you know, Congressional Budget Office
give us some good
comes out, and they say, listen, here's, in this year, Social Security is going to not be able to pay all of its bills. So, for instance, last year it was 2034.
Yeah.
There was going to be a 20% haircut. The year before that, it was 2033. Then it was 2032. It was 2029. I can remember when it was 2028. So the good news is that we're on the same track, but we're kind of treading water in a sense that it's continuously being pushed back. So while, yes, we have 10, 11 years before we see a change or reduction in benefits, assuming nothing is done, the good news is it keeps moving backwards.
Well, we're seeing better employment numbers, right?
Yeah.
We can't argue with that. Wage growth helps. We're going to talk about this on the other side of the break. The Social Security's Trustees Report. Positive findings.
Investment Advice blog. It's required reading for the informed investor. Catch it today at realinvestmentadvice.com.
So you're ready to retire, but are you ready to transition to Medicare? Knowing how health insurance works after you leave your job is vital. Our next Lunch and Learn will tackle transitioning to Medicare. Wednesday, May 15th, with Danny Ratliff and Richard Rosso. How do you sign up for Medicare? And how will it work with the insurance you already have? Food for thought and food for your belly. Register now for our Transitioning to Medicare Lunch and Learn with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
Hi, Lance Roberts here. If you're like most people, your 401k plan represents the bulk of your retirement assets. And unfortunately for many, managing your 401k plan can be difficult. There's so many choices, so many things to consider. With just a quick email, a couple of questions, you can put RIA advisors to work for you managing your 401k plan. Just simply click Ask a Question at realinvestmentadvice.com or give us a call at 855-RIA-PLAN. That's realinvestmentadvice.com.
The Real Investment Show.
And now, another page from the Real Investment Advisors Investing Manifesto. Manage risk and volatility rather than trying to manage gains. You don't have to be right all the time. Long-term investing success is a 70% gain. Let us help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
Can't catch the whole show now? Listen to our podcast later at realinvestmentadvice.com.
I complain about inflation at my house all the time. I yell at my wife. I don't really yell at her. I don't really say anything because she'll yell it back at me. But in my mind, I'm yelling about how much stuff is costing, and then I just go on about my business.
The Real Investment Show podcast.
Mike understands this. He's the same way. Mike and I have a lot of arguments in our head that never leave into verbal space with our wives.
At realinvestmentadvice.com.
She scares me.
Hey, mine too. It's okay.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. realinvestmentadvice.com.
Health and financial security touches everyone within your organization. Offering benefits for all doesn't need to be complicated. Hi, I'm Tom Allen, Senior Benefits Consultant at RIA Advisors. RIA Benefits provides independent expertise to find solutions that speak to the mission of your business, the culture you want to establish, and the budget you are able to work within. Book a free consultation with me at realinvestmentadvice.com/retirement, and we'll find a solution that takes care of your most important asset, your people. realinvestmentadvice.com/retirement, realinvestmentadvice.com.
The Real Investment Show YouTube channel has all our videos ready for your easy access, like Technically Speaking Tuesday, Financial Fitness Friday, plus each day's radio shows. Subscribe and bookmark our YouTube channel at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Danny and I love some of those financial dust bunnies. Those are the financial topics no other brokers want to clean up and talk about, but we do. So Social Security, Medicare have to be on that list. So on Medicare, transitioning to Medicare, the Lunch and Learn, I think, Danny, we're almost full because it's a small room and it's live with lunch. Thus the Lunch and Learn. But we have a waiting list, so we get enough to people on that list. So still go in there and sign up at realinvestmentadvice.com. It's Wednesday, May 15th at noon. But it's also going to talk about the coordination of health insurance with Medicare, right? And COBRA and all the Medicare crazy deadlines that you have to keep track of, right? When should you sign up? All of the things that you want to talk about, we can help you make easier. I spoke to a client's wife the other night and walked it through with her. And she goes, my gosh, she goes, you made it so easy to understand. Thank you so much. She knew exactly what she needed to do. She understood it. We want to make sure we can break it down for you and make it less threatening.
It is. You know, we do a lot of these lunch and learns and webinars, and this always seems to be one of our most well-attended.
Yes.
And you know, with tons of questions. And
good ones, too. Yeah.
I would bet that if we asked, what is something that you're least confident in going into retirement, that this would be one of them. And I think there's a lot of fear around it because we do know the cost of healthcare and health insurance, also the moving parts that are associated with this. You just alluded to the time that you have to, your open enrollment periods or special enrollment periods that you have that you must sign up
yes,
to not get a permanent penalty. to make sure that you have that guaranteed insurability period, which is so important. So they can't deny you or they can't increase your premium substantially. So it is extremely crucial to your financial well-being to make sure that you get this part right. And, this is something like you mentioned a lot of people don't talk about because it's not to deal with the market. It's not, the ups and downs. And it's not that quote unquote sexy thing to do. But what an important part.
It's so important.
Of your overall financial plan and big picture. It's not just about, how do you make money, protect money, but it's how do you save money?
Making the wrong decision can mean your life, depending on your health. It's that important, right? Because depending on
it that way, absolutely.
Depending on the product I accept, based on the condition I'm in at the time, and the way I get sold certain things. Because how many people right now who are close to 65, are getting bombarded with mailers for all the different insurance products, most likely Medicare Advantage. So you need to know the different roads that you can take. And we'll talk about that. But again, we get enough people together for the next 15. We'll move up. We'll do another one for you. We have lunch, so you're not crabby through it, and you'll enjoy it. Yeah.
So Richard and I were on a call last week. We don't sell health insurance. We do have an insurance arm. And we've been, we have a lot of clients say, well, you guys teach classes on this. You guys do this. Why don't you have somebody in-house? We've never had anybody in-house.
Yeah.
We don't get paid by anybody. We do know people that do it. But we've been, let's kick some tires to get a better understanding on this. So we had an interview with a company last week. And we're going through, and I asked this question very, it was targeted that, hey, what's all the push behind Medicare Advantage? And what was their response?
Tell me.
Well, it pays more.
It
pays the brokers more. And so
put me in a spot there.
And so that's
I don't remember.
And that's so frustrating. I knew I had a really good idea what they were about to tell me.
Sure.
But it was so frustrating. So I think we have to be cautious because we get so much information on Medicare Advantage. And like you mentioned, it could be life or death situation. I know plenty of people on Medicare Advantage that are doing just fine.
Yes, me too.
But we do prefer original Medicare. And so those are things we'll get into. But, I thought I'd just throw that point out. It's always...
And for some people, Medicare Advantage compared to Medigap, and these are different ways to supplement Medicare. Because when you buy Medicare, you're buying a piece of Swiss, you're getting Swiss cheese, you got to fill the holes, right? So we help you understand that. So,
but it's crazy though, if it's that much better, why are the insurance companies paying these people more? Is it better for you? Is it better for them?
Not going to say anything. It's very lucrative, although people are, there's a crackdown on some of the ads run. And I think that was actually smart because some of the ads that they were running made it look like the federal government was behind it. So, again, we're here to help you make objective decisions. So back to Social Security Trustees report, what was really good, the Disability Trust Fund is in a great position. Right, so that fund is projected to be able to pay 100% of its scheduled benefits through 2098. When Danny goes to Lance at his desk in 2098 and goes, hey, you're not taking that disability insurance, right? Because then you can't come to work.
He's going to be a robot by that point.
That's what I mean. He'll be AI at that point. Lance AI. I love it. So we have to see about, again, this is all based on actuarial findings, right? Also found out that the Medicare Part A trust fund is in better shape. So Part A is the key part of your hospitalization, right? The fund pays for healthcare services like hospital stays, hospice care for Medicare. So according to the trustees' report, the fund will be able to pay 100% of total scheduled benefits until 2036. That's 5 years later than reported last year. And then there'll be enough, it's sufficient to pay 89% of total scheduled benefits. So we seem to be buying time with some of these findings in the trustees' report, Danny. But ultimately, someone is going to have to face tweaking, fine-tuning, so that we can push this out 100 years and not have to worry about it.
Yeah, I think that's a good point. There's so many concerns about this, and you always say something that is, we've said it. If we said it once, we said it 10 times. If this goes away altogether, you're going to be walking over people in the street. I mean, that's how many people rely on these funds.
Lance doesn't make fun of me about it, but because I think he understands
around a little bit.
He understands the math behind it. But then you got to look at the practicality as we talk about how people are so poorly set up for retirement that this element is too important now. I mean, you couldn't let this go. It has to be fixed. So either we're going to be up against the wall or not because of just how many people are dependent upon the income. So what was also good about this, some of the key trust funds actually grew last year. Old Age and Survivors Insurance Trust, the Disability Insurance, the Hospital Insurance Trust Fund, the Supplementary Medical Insurance Trust. So these assets were $2.7 trillion for the Old Age and Survivor Insurance. Very good. So we're seeing that less of a decline. That's also positive. Again, doesn't mean that we shouldn't be fixing these things. It just shows that there are some bright spots in the trustees report.
Yeah, you should listen to Lance talk about how bad it is. So we're trying to give you guys a glimmer of hope.
Yeah, I mean, again, it's not perfect, but it has to be fixed. So the annual deficits for the combined, the OASDI funds have shrunk. So that's nice. And again, I think it's because of more payroll, people on the payroll. Again, we need people working to pay into the system. So we've seen better conditions for that. And I hope that continues. The negative actuarial balance for the combined funds shrank. That's good. That's positive. Now, again, this could all turn in the next year. But again, we're seeing more positive light to push out the crisis. And even in the crisis, what are they saying, Danny? Benefits would be cut by what? 25%? 20%?
The number goes back and forth between 20 and 23%. I think right now it's 20%,
Yeah.
Depending on the report that you're actually looking at. A lot of different agencies go out and look at these numbers, and tax groups. And, some of the big things that we do think will happen. It is probably easier said than done just because of the electability aspect with career politicians. But, you mentioned raising the retirement age by just a little bit. That helps quite a bit. Removing the cap from Social Security currently.
I can't imagine that. Now, again, the practicality is if you're working a manual labor job, you're most likely not even making it to full retirement age. You're probably at 62. You're probably taking some form of benefit. But we are mostly a service economy.
Yeah.
Right? You can work longer, Lance, because your brain is so sharp. And therefore, certain generations, you can push it out. Now, you did it for baby boomers, Gen Zs, and so forth. Now you can look at it not Gen Zs, Gen X. You can move it forward another year.
I think the difference is, though?
What?
Going back to social media?
Yeah.
Is the outburst is so different. I'm seeing people
unhinged.
who are younger, who are online, actually discussing this.
Social Security?
Oh, yeah. Like, don't you dare try to raise that retirement age. Don't you try to increase benefits, right? And so...
Because they don't want to work. They don't work 5 days. They want to work 4.
Maybe.
I don't know. Maybe that's where social media pushes this into the political narrative, right? That people start saying, oh.
Well, it is, but it's also they don't want to do anything because they want to be elected. And these people are saying, forget you. You're not going to make me work a year longer. I'm already doing this, this, and this.
I'm already working 8 hours and I don't have any time for anything else during the day. We'll be right back.
Investment news you can use, delivered at the speed of the internet at realinvestmentadvice.com.
So you're ready to retire, but are you ready to transition to Medicare? Knowing how health insurance works after you leave your job is vital. Our next Lunch and Learn will tackle transitioning to Medicare, Wednesday, May 15th, with Danny Ratliff and Richard Rosso. How do you sign up for Medicare? And how will it work with the insurance you already have? Food for thought and food for your belly. Register now for our Transitioning to Medicare Lunch and Learn with Ratliff and Rosso at realinvestmentadvice.com. Realinvestmentadvice.com.
Small businesses are now being challenged by the lack of employees and how to attract and recruit the best employees. To get the better employee, you'll have to offer a better package. Hi, I'm Tom Allen, RIA Advisors Retirement Plan Consultant. Don't assume a 401k plan is too costly or complicated for your small business to offer. Let us show you how to make the most of an affordable and effective plan that will deliver true value for your business and your employees. Call me toll-free at 855-RIA-PLAN or online at realinvestmentadvice.com. That's realinvestmentadvice.com.
The Real Investment Show.
When it comes to wealth management, most people think of stocks and bonds, but it's like enjoying one layer in a 7-layer cake. At RIA Advisors, we want to make sure you get your cake and eat it too. Social Security, Medicare, creating a tax-friendly retirement paycheck. Perhaps you're saving for college. How about life insurance, guaranteed income solutions, all along with comprehensive planning? At RIA, a holistic approach to your money is our priority. Call us today, 855-RIA-PLAN, or find us online at realinvestmentadvice.com. Realinvestmentadvice.com.
And now, another page from the Real Investment Advisors Investing Manifesto. A passive investment portfolio requires active risk management. It's not a choice, it's necessity. Diversification doesn't protect against risk of loss. Let us actively help you reach your financial goals with RIA Advisors. Neither bull nor bear. RIA Advisors, 281-501-1791 or online at realinvestmentadvice.com.
You're listening to The Real Investment Show.
Welcome back. So, retirement income is an art. Yeah, there's some science behind it. But let me say this. If you're trying to craft a retirement income mostly from variable assets that go up and down, then you have to be variable in your thinking. But a lot of advisors, 61% of financial advisors, commonly use 4% as the withdrawal rate for clients. That was research done back in 1994, seminal research by Bill Bengen, who at least approached the topic. But for some reason, it became like the holy grail of withdrawals. And in finance, there's never a need to change anything because nothing else changes. If it works for Wall Street, then no matter what, it's going to stay the same. But it's not true. Because depending on the stage of your life, as you work through stages, when you retire, your withdrawal rate is going to change. Unless you are exclusively in a guaranteed income pension situation where you just have checks coming in and you don't need to worry about it. So David Blanchett, who we study, he does a lot of great research on this as well. Maybe it's 5%. Maybe that's the initial start. The most advisable initial portfolio rate for most retirees may not be 8%, but 4% may be too safe. That's true. This is the dilemma, and the reason I'm bringing this topic up, Danny, is there's really no true number. There's just a method or strategy, depending on how you spend and your health and other things, that lead to how that withdrawal rate changes over time. Right? If I'm a person who retires at 55 years old, one, the money has to last longer. Right? And what if I'm now going to be in a headwind for returns based on valuations in the market for the next 10 years? Right? But I'm also in my active years of retirement where I might have 15, 20 years where I'm traveling, I'm blowing and going. My withdrawal rate might be higher. And that'll be okay. But you have to include that in the plan to say, well, we work with retirees. This is what happens. You're blowing and going for 20 years, and then all of a sudden you're slowing. You're not sick. You're not unhealthy. You're just like been there, done that. Your hobbies have changed. You don't eat as much. You don't go out to eat as much. So you're going to be in a period of level spending for a strong, long period of time. And then as you age, healthcare expenses, your spending starts to pick up again. That cannot be done with a set 4% rule.
No, and I think that's the problem that many people make. And, we've gone back, and these studies change frequently. And it's going to be dependent on where interest rates are. Mm-hmm. What can we get on a bond? What can we get on, an annuity, CD? Those are big, big differences. And so, a couple of years back, same studies showed that maybe this withdrawal rate should be like, 2.6?
Yeah.
So now we're having the argument, should it be between 4 and 5? This is going to vary. There's so many variables, and I don't think that, this is not a one-size-fits-all type of solution. It needs to be different for everyone. And this article does, though, Rich, discuss
the variabilities.
Right? Are you in a conservative, moderate, or aggressive portfolio? Are you, how much time do you have until retirement?
Right. So if you have 40 years, right, you got to consider the fact not only that you have 40 years in retirement, and we have people do living to 100. Well, I have people sometimes do 23andMe and do the health diagnostic. We do a lot of things to help people understand is what is the reality for you. Some people really have their own magic 8-ball. They think they know when they're going to die. Oh, no. And I don't know if I've said this on the show before, but it still cracks me up. I use it at parties. People love it because it's like, really? Nope. My parents lived till 65, and that's when I'm going. Well, what if you don't? Well, then I'll go in the woods. Well, what's going to happen in the woods? Well, I mean, you're not coming out. You know what I'm saying. I'm when they're in the woods, and so I won't see you again. Once you enter those woods, you're not coming back. You know what I mean. So,
and then next year you're like, hey man, how's it going?
Yeah, 66. You're out of the woods.
Whoa, you're still here.
Did you fight the bear like the Revenant and you won? You came out? What happened? So the withdrawal rate for someone who's in a moderate allocation for 40 years might have a 4% withdrawal rate over time. If I have 15 years, maybe my withdrawal rate's 8. Yeah. So according to Dave Ramsey, everybody's only going to live 10 years in retirement based on his withdrawal rate. He says everybody should take 8%. So if you're making 12, you could take 8.
So many variables out here. And I think this is a crucial point. It brings back to which
you got to have an open mind with this.
You got to have an open
retirement
mind.
Income distribution.
You need to have a financial plan done. Understand what your distribution rate may be. Visited with somebody last week, and we were talking. and said my distribution rate I think is pretty low, and I said, yeah, I think you're going to be right. I said, so I think you could probably spend some more money. But what we found, 68 years old, wants to delay Social Security till 70. That the next 2 years distribution rate's going to be a little bit higher. He's like, whoa, okay, I didn't think about that. And then it declines substantially. Now, that asset coming in, right? Social Security, income.
Yeah.
That's a big boost.
That helps a lot at 70.
Correct. Delaying it. You want to make sure his spouse gets the most that she can get if he passes.
Yep.
And then also able to turn on a annuity stream. So kind of waiting, saying, I don't think I need this right now. I want to delay this. Now, I do see sometimes people will turn that annuity stream on already. Just to go ahead and take advantage of that to kind of meet that gap of no income.
The gap before Medicare.
Correct.
Right. You wanted that gap before Social Security at 70. You have to fill the gap. Some people will start drawing down on their IRA, which is smart because then the government will force you to do it, right? You want to prick that tax-deferred bubble sooner, maybe. Yep. But you're right. You might have an annuity structure that you can say, hey, I'm going to let Social Security sit and grow. My 8% delayed retirement credit. And then now I will start the annuity coming in at that time. And again, that's an art too. That's not any science that you use to put this together. You looked at the variables, how this client spends. So to have a hard, fast rule, retirement income with variable assets and all the other assets you have that are going to create income is difficult.
That's right. Somebody else visited with not long ago, and I think people who listen to the show know that we don't use annuities a ton. Probably could make an argument we could do it more.
Yeah.
In a lot of ways. But as a fiduciary, we feel like, on the investment side, we need to look at the whole big picture. And as a CFP and all the things that we do. And so I think there's certainly a place for them. But I'd had an interesting call with somebody else. They said, hey, 60 years old, same type of situation, want to spend a little bit of additional money, didn't want to touch Social Security, had a pension, said, I can get a pension. Here's how much I can get out of it. I'm concerned, though, if I take it, I may have issues if, my beneficiaries may not get it if we pass. What if, and what I really want is I want to be able to do these things for the next 10 years. What if I went and moved that into something like a 10-year period certain? Right. So just talking about different ways that people can recreate income.
So the strategy you're taking in the annuity makes a big difference.
Correct.
You can't just say, I want to take a single premium. I'm just going to take it on my life, because if I die tomorrow, then the insurance company gets all the money. I may get a bigger check, but you have to find or craft how you're going to take that annuity distribution.
Correct.
That makes it work. So you did 10-year period certain because he had these things he wanted to do.
Correct. And so what I'm getting at, though, is that everybody's situation is different. Those are two situations significantly different time frames, different time horizons. Somebody who's 60 versus 70 is going to have a lot more time they're going to have to think about.
Yes.
So it's extremely important to understand your own situation. And, going back to what we had talked about in the first segment, the emotional side of it, how can you best protect yourself from making emotional decisions? And, understanding from a distribution perspective, can your portfolio withstand some of these bad years? I think that's something I think is great, Rich, when we go back to a financial plan and say, you know what, we assume for bad timing that you retire and markets crater. Your portfolio,
or they don't return as well.
Yeah, that's right. We have lower for longer for whatever reason.
For longer instead of higher for longer on rates, lower for longer for returns, which could happen with valuations the way they are, and a Fed that's not really moving quickly to lower rates.
That's right. And so, but being able to do that gives you a sense of understanding and probably peace of mind. I know peace of mind, because we know we can navigate these markets. We can go through these times, but also we can get a very good understanding as far as what our withdrawal and distribution rate is. And that will change. It's going to be flexible. 1 year markets may do really well and you're going to feel pretty good about it. And you're going to say, hey, you know what? We're going to take that extra trip. We're going to do those things we didn't think we were going to do.
Yep.
Or, you may have an issue and something, side swipes you, your car goes out, the AC goes out, everything goes wrong at once, and you need additional funds. Also, people are pretty good too when markets are bad. They say, hey, how many calls do you get says, you know what, I'm not going to take as much. I'm not spending as much right now.
It's nice to be able to tell them in our plans, though, that they could.
I know. And how many times does somebody say, no, I just don't want to?
I'm like, well, you could. Really? No, you can. You're fine. We planned for this. But if you don't want to, and that's going to make you feel bad if you do, don't do it. You brought up something also very important. These retirement income streams are not just for you. It depends on your family structure. One, if you're single.
Yeah.
Are you married? Do you have a spouse that didn't really work a career? Or maybe had their own career and it doesn't matter? Are you starting again with a second family? Are you 65 years old with a 40-year-old wife and 2 new kids? This is structure changes. Retirement income structure has to change. So advisors sometimes don't acknowledge spending flexibility. And that's the art of retirement income. We could do a lot with numbers, but we have to have this intuition on how to craft the perfect retirement income plan for you. Well, that's it for today. Yay! Weekend's coming. Hope you all enjoy it. Thanks for everybody on the YouTube chat. You all crazy, crazy, crazy people with a lot of caffeine. Sign up for the Real Investment Advice newsletter. You'll get it every Saturday. Transitioning to Medicare Lunch and Learn. Our blog posts are out. Mike's got a new piece out yesterday. Lance will have one out today. The guy's a machine. I am a machine. I am a Lance AI. Have a great one, everyone. Thanks for tuning in.